Hello, this is James Robinson with the Extrinsic Value blog. Today we're going to talk about our results for the month of May. May was a good month for us. The market finally turned around. It had been in the doldrums really since February. But in May it turned positive. The S&P was up and so were we. Our funds, if you remember, we've taken our total portfolio and divided it by a certain number of shares so that we could keep things constant even as we're bringing money in and out of the fund. So we started the fund with a value of $9.56 per share. We ended the month with those shares being worth $9.96. That means that we had a gain for the month of about 4.06%. So that's good news. And obviously it changes my total performance for the year since January 1. We're still slightly down, about 3.38, so less than 1%. And again, we were down almost 4.5% at the end of April. That puts our negative annual rate of return now compounded to negative 0.92. But again, we're on the mend. Things are getting better. The market's getting better, and hopefully we've turned a corner. For the month, I went from 92% invested to about 87% invested. If you remember last month, we had invested some money in high dividend stocks that we bought because we just didn't want to leave the money in cash, wanted to get some return. However, my hope was to get 3 or 4% in dividends. And instead, what happened was the stocks almost went up immediately after we bought them, about 5%. So we sold those stocks because we'd gotten our goal of the 5% return on the money, returned them to cash, so there was no risk, and sort of just moved on. In terms of performance against the benchmark, the S&P was also up, but it was only up 2.16% for the month. So we handily beat the benchmark. For the S&P, for the year, the S&P is up about 0.84%. So far for the year, we still lag the S&P, but only by a small amount, and I'm still confident we'll outperform the S&P over the course of the year. As you know, one of the strategies that I have is that I buy a stock, and when that stock goes up 15%, I sell the original investment. I keep the profits in that stock, hoping that in the long run, those stocks will outperform the market. So for the first time since February, I had 3 stocks cross that border and return 15%. In terms of profit. Those stocks were Apple Computer, Storm Ruger and Company, and T. Rowe Price Group. So Apple Computer, we bought at about $164 a share. We sold at $190 a share. We made some dividends while we owned it. It turns out we owned it for about 270 days. And the annualized return on that investment is about 23.79%. We did even better on Storm Ruger because we only owned it for 98 days. That stock has got an annualized return of 57%. And T. Rowe Price, also we owned for a shorter period of time, 159 days. And so that was about a 34.89% return. So all 3 of those stocks were very good. And now we have those stocks in our portfolio for the long term. And we're able to put the original investment for those stocks back to work in other new investments, which hopefully are more undervalued than them. When I moved from Apple Computer, Ruger, and T. Rowe, from active to long-term, that of course left 3 openings in the portfolio. So we added 3 new stocks, Ventas, Pfizer, and Rex American Resources Corporation. There are new holdings. You can see the prices and the dates we bought them. You'll see us report back to that hopefully in a relatively short period of time when those stocks are up 15%. We'll talk about how they did. Also, I'm working on presentations where I will talk about a stock every week that I think is an exciting stock, and we'll mix in some of the stocks that are in our portfolio so you can get a sense for why we're investing in the companies that we're investing in. So position reports as we've invested in new stocks, and stocks have fluctuated in value. This is a breakdown of the companies that we currently own. Union Pacific, Eagle Pharmaceuticals, H&R Block, Pfizer, Ventas, Rex American Resources, Viad, Saga Communications, International Business Machines, IBM, Williams-Sonoma, Argon, Sanderson Farms, Thomson Reuters, Procter & Gamble, and Westwood Holding Groups. So again, we plan on holding these stocks until we have a return of 15% on them. When we do, we'll trade them in on hopefully new and more undervalued stocks. We also have a series of positions that we call our long-term holds. Those are companies that we bought and that did go up, and so we keep our profits, and we hope to invest. We basically want to forget that we own them and see how they do over the next 3 years. And over the next 3 years, hopefully they'll outperform the market, or we'll at least have a couple of these stocks that really go crazy and do great, and the rest hopefully will do solid. So we added 3 new stocks to this. So these are the new numbers. The companies now are Net1, EUPS Technologies, Sturm Ruger, United Therapeutics, T. Rowe Price, Gilead Sciences, Exelixis, Williams Sonoma, Value Line, Apple, Delta Airlines, Waddell & Reed, and Wabash National Corporation. Combined, those companies don't own very much of the stock. They're about 9.3% of the fund. But again, we just sort of forget we own them, and hopefully they grow over time. In terms of our cash report, over the course of the month, we didn't add any new cash to the portfolio. The number of shares we own stayed constant as a result. We have 6 stocks that paid a dividend in the month, but they were pretty negligible amounts, about 0.2% of the portfolio value. In addition, we had some uninvested profits that came from the dividend play we made before, so that added in about another 0.25%. So all told, we added about 0.5% to the cash on hand. Basically, cash on hand remained constant. My goal is to be virtually 100% in stocks, and as of today, we have about 13% in cash. As I've said before multiple times, I don't look at my job as buying and selling stocks. I look at my job as trying to research companies and find solid companies. I think if I do that well, the buying and selling will take care of itself. So our goal is to look at 3 stocks per day. We actually took a break in late April and early May. I took a month off. For about 31 straight weeks, I had been analyzing 3 stocks a day, every day, 7 days a week. And the honest truth was that I felt like I was starting to go through the motions. I felt like I wasn't that interested. I wasn't that excited. I felt like things might be slipping through the cracks. I think it was a couple of things. I think I needed a break. And I also think it was just wearing on me that we hadn't had any really good news because the market had been in the doldrums, which is a learning experience. And I recognize that you just kind of have to suck it up and go through those times. So we did that. And I did start doing the research today. About in the middle of the month, I started analyzing things again in May. So we ended up analyzing 58 companies, which is about 2 per day. Obviously still below our goal of 3 per day, but better than we did in April. So I found, of those 58 companies we looked at, we found 9 companies that we thought were solid companies that I'd like to buy if the price was right, which is about 15% of the stocks, which is sort of in keeping with our typical findings. And of those 9 stocks, 2 we thought were also cheap enough to be interesting buys today, and that really merited significant more research in terms of what we're going to do as we replace companies that become permanent holds. So the totals for research, we've been working 39 months on this model. To date, I've analyzed 780 companies, which is up to about 2.85 per day. So I'm not far below my goal, especially considering that we took a month off. Of the 780 companies, 142 of those companies were found, were solid companies that met my investment criteria. But that's about 18.2%. Of those, 32 companies are cheap enough to consider buying at today's prices. If you remember, it was about 32 companies back last month, but the market has gone up, and so obviously some of these stocks have gone up in value, and the prices are now higher than I would like them to be in terms of buying them. As it stands today, about 4.1% of the companies researched are attractive in both fundamentals and price. So in summary, the stock investments were up about 4.6% for the month. We outperformed the S&P 500 by 1.9%. 3 companies passed the 15% appreciation threshold and became long-term stocks. 3 new companies were added, giving me 15 stocks in the fund. Cash remains basically unchanged at about 15% of assets. We researched 58 new companies. We found 9 solid new companies to track. And we have 2 stocks we added 2 stocks which are currently cheap enough to warrant for the research and to consider buying. Thank you very much for your time. And we're going to be, as I said, my goal is that in the month of June, I will be adding additional notes on what we're looking for in stocks and our model for what we're following. And we're going to be starting to work on a presentation for a stock a week that we think is worth people following. Thank you very much.